What I want to do today is weigh in on one of the most topical debates, I think, in markets this year, and that is whether or not SaaS is dead. And what I'll do is paint a vision for one of the world's mission-critical enterprise SaaS platforms, Salesforce, in which it leverages its existing position within over 150,000 corporate customers to essentially distribute third-party intelligence in a way to actually solve problems and unlock real value, especially through labor efficiencies inside organizations. And so when you think of Salesforce as a privileged distributor rather than just a creator of code, you can start to see a world in which Salesforce thrives. And in this world, Salesforce is completely undervalued today. So that's what we're going to explore. I'm going to move through these slides pretty quickly, and then we'll have time for Q&A at the end. Let me just start by giving a really brief background on Salesforce, with a little bit of a basic history shown on the chart. I'm not going to spend too much time, going through all of Salesforce's various offerings. I'll assume some base level of familiarity by the audience. But Salesforce is by far the world leader in customer relationship management, or CRM, cloud-based software, and it's something like 4 times or 5 times larger than the number two player. Essentially, Salesforce houses all the data, metadata, and workflows associated with company customers, interactions, sales team processes, customer support, case management, etc. They also own Slack as a key interface layer for all of their services. And then, of course, over the last couple of years, Salesforce has really leaned into integrating LLMs and agentic capabilities into their offerings, which they're calling Agentforce. And we'll talk more about this in a few moments. So, in terms of this presentation, what I want to do is just step through 4 themes. So, the first is bears have declared the death of SaaS, including Salesforce. Number 2, Salesforce substantially solves the difficult deployability problem, and will argue that distribution is Salesforce's key moat and the hard thing for others to replicate. Number 3, tokenomics are fast becoming a major customer consideration. And we'll talk about the pricing power of foundation model companies and whether or not models are commoditizing. And then number 4, we'll argue that Salesforce appears well positioned and misunderstood. And we'll lay out how we are framing the investment opportunity that we see in Salesforce today. Okay, so let's first talk about the death of SaaS. And I'm sure, as all the listeners will know, in recent months, advances in agentic AI from Anthropic and others have really captured the market's imagination and created a lot of fear. And this, of course, is the SaaSpocalypse, the SaaSpocalypse narrative. So, the ideas follow that, coding agents are so good that software can now just be copied or insourced or recreated quite easily. The arguments can be extended to say, well, agents will eventually become so good that they'll perhaps bypass the need for traditional software entirely, and even the humans that use the traditional software. To the extent that's true, then the death of the seat-based SaaS model will exist because we won't need as many humans. And you can extend the argument to say that perhaps foundation model companies will essentially take over most industries. And so what that's done is that's caused a whole lot of software stocks to sell off quite significantly, including Salesforce. And so you can see in this chart, Salesforce has basically seen its shares halve in value over the last little while. And so it's interesting to reverse engineer what's priced in to Salesforce at these new low levels. And so at this level, the stock is pricing in revenue growth of only about 1% per annum. Now that's assuming that Salesforce is a going concern. I guess you could recut that and say the market is assuming a higher rate of growth for Salesforce for a period of time, but then it discontinues. It just literally ceases to be a going concern and just goes out of business. That would be another way to cut this. Another metric, the enterprise value to annual gross profits. It's 4.5 times today. It's interesting to note, just by the way, in the 2000 dot-com bubble, when Cisco, went from peak to trough, 90 something percent decline. When it bottomed, it bottomed at 5 times enterprise value to gross profit. So Salesforce is already below that level today as a starting point. And then another metric you can sort of think about is you say enterprise value to the gross profit of the backlog that's already been signed. So there's a $70 billion backlog, which is already on the books today. And that's, you can assume some sort of gross margin there of, around 75%, something like that. And you can look at the ratio of the enterprise value, which is about $160 billion today, and divided by the gross profit of that backlog, and it's down at 3 times. And by the way, that does not include any agentic consumption, which is the piece that's growing very rapidly. So those are a few metrics of what's priced in today. We'll come back to that at the end of the presentation to talk about valuation, but that's really just setting the scene. Okay, so now let's talk about the deployability problem, which we think remains underappreciated and really goes to the heart of Salesforce's distribution advantages. So it turns out that deploying AI agents safely inside an enterprise is much harder than it looks. And it isn't about agents being particularly difficult to define and run. That's really the easy part. It's actually about creating the right environment for the agents to run. So enterprises really need to think very carefully about things like governance. So, for each agent that you define, what data sets can the agent access and with what permissions? What tools can the agents use? You need to think about security. This is a really big one, by the way. It turns out that the nature of AI models is not really what most people think. And there's just extraordinary AI safety research. I encourage everyone to kind of go down the rabbit hole within. This safety research shows that AI models actually can show situational awareness and can actually deliberately deceive users. The safety research shows that AI model guardrails can actually never be foolproof. And it also shows, for example, that malicious backdoors can be hidden in AI models undetected. So a whole bunch of considerations to think about there for enterprises. Things like transparency, you've got to be able to, audit what each agent is doing and why it did it. You've got to have real-time visibility into what's going on. Reliability, as we all know, AI models produce probabilistic outputs, not deterministic outputs. That's suitable in some use cases and sort of really not suitable in other use cases. Things like control, like can you remotely shut down an agent if it goes rogue? Can you do that in real time? And then even just measuring the ROI, like the true total cost of an agent and relative to the value that's unlocked, that's not a trivial task either. So all of this says that really it's the distribution of intelligence into the enterprise that is very, very difficult. And that enterprise agentic deployments are probably going to be slower than the prevailing market narrative might suggest. And when we interview enterprise customers, which we do all the time, this is exactly what we're seeing.